If there's one thing in personal finance that's super visible and tells you exactly how you're doing, it's your credit score. And for all of us crazy competitive people, it's like, what can you do? How do I get that score higher? I got you. So what I'm gonna do today is I'm gonna walk through a bunch of different ways to increase your credit score, and I promise it's not just pay your bills on time. I'm even gonna go through and rate them in terms of which ones are slowest versus fastest, so you can prioritize that way as well. Hey guys, Jessica here. Before jumping into it, really quick call out that we're Uprise. We're a VC-backed fintech company that is building the best financial plan experience in the world. One number, 1.5 million. That is how much on average we've added back to each customer's lifetime net worth. And the way we do this is by taking a look at people's specific situations and then looking for optimizations. So everything from budgeting to credit cards to employer benefits and everything in between. All the plans that we put together are completely personalized, Wall Street level, and 100% free. So to get your plan, definitely check us out. I've linked to us in the description below. And also, if you get value out of this video, please give us a thumbs up, hit that subscribe button. It really helps small channels like ours. So getting back to it, increasing your credit, what I'm gonna do first is just talk really quickly about how credit works. I promise it's fast. And the reason is I want to talk about the different levers that you have in terms of increasing your credit score. And then I'm gonna jump into like lever by lever, what are the different strategies you can take in order to increase your score. Let's jump into it. Okay, so starting off, how credit works. The credit score is basically the second most important number in your financial life. The first one is your net worth, but that is a different topic for another time. The credit score basically touches so much of day-to-day life, and it is basically the number that lenders use to determine whether or not you're good on your word, right? Like, so if you have a really high credit score, then they're more likely to believe that if they give you a loan, you'll pay them back. And they would probably believe the opposite if your credit score was pretty low. And the interesting thing is, it's not just about borrowing money, right? Like your credit score could impact everything from what kind of credit cards you qualify for, to what kind of cell phone you can get, to whether or not you can get that apartment you're looking at. So for example, your apartment, right? Like a lot of landlords will run credit checks prior to deciding whether or not to take you on as a tenant. So in terms of how it works, there are basically two big providers of the credit score. So FICO and VantageScore, those are the two methodologies behind credit scores, and they generally work pretty similarly. They both range from 300 on the low end to 850 on the high end, with good being 700 and above. Okay, so then in terms of increasing your score, then there are actually like 5-ish things that make up that score. So the first one and the most important one is the payment history. Payment history is basically, have you been paying on time? Forever, basically. The second one is credit use. And so this is pretty much like how much debt do you have outstanding? I'll talk a bit more about this in a second. A third one is the length of your history. So like how long have you had credit history for? This is both like the average age of your credit cards as well as how long have you had your oldest credit card? How old is your oldest credit card? The last two buckets are the smallest ones. One is credit mix. So do you have different types of credit? There are two big types of credit. One is like a credit card, which is called a revolving loan. The other kind of debt would be like a mortgage or student loan where you're like paying regularly over time. That's called an installment loan. So have you had experience with both types of loans, and have you managed both of them well? And then the last one is new credit, which is basically like, have you recently applied for credit? So if I'm applying for a loan today, but I recently applied for a credit card yesterday, then that'll look pretty bad because I'm applying for lots of different types of credit all at the same time. Okay, that was it. And so in terms of increasing your score, you could literally go bucket by bucket in terms of figuring out, okay, I'm gonna juice this section or this section and increase my score that way, which is basically what we're gonna do now. Starting with the biggest bucket, the most obvious one, is to pay your bills on time, ideally in full. There's no shortcut for this one, and I have to mention it, I know, but that is the fundamental piece of your credit score, so make sure that you have this one in good shape. Make sure that you have all of your bills set up on auto pay. Make sure you're checking your bank balance regularly to make sure you don't overdraft stuff. We did a separate video that talks about a pretty foolproof system for setting all of this up. You can definitely check that video out up here. Okay, so then let's talk about the rest of the buckets. The second biggest bucket is credit use. And I kind of glossed over this earlier, but basically credit use is an equation. It's an equation of the total debt that you have outstanding divided by the total amount of debt that is available to you. So I'll give you an example. Suppose you have one credit card. This credit card has a $100 limit. That $100 goes in the bottom. That's the amount that you have available to you. And then you take this card and you go out and you buy something for $50. So now your credit use is at 50%. So in the case of credit use, what you want is to have that number be the lower the better, right? So 30% is good credit use, less than 10% is even better. And so basically what happens on a month-to-month basis if you have a credit card is, let's say you put $30 on there, now you're at 30%, you pay it off, you're back down at zero, and then it sort of fluctuates over time. So therefore, one thing you could do in terms of lowering this percentage is by charging less on your cards. Say, switching over to put more stuff on your debit card, for example, rather than your credit card, or just spending less overall in general. And you should see the impact of this one relatively quickly, within a month or so. The other thing you could do, actually, maybe in addition or instead of lowering the amount you spend, is increasing the denominator, right? The amount of credit available to you. And there are two things that you can do here. The first one is you can call up your credit card company and say, hey, I've got a big purchase coming up. I'd love to increase my credit limit. So then it goes from $100 to $200, and now, right, your total credit use percentage has come down. The other thing you could do is you could apply for more credit. You could get another credit card, or you could apply for a loan or something along those lines, and that would also increase the amount of credit available to you. This is not to say that you should go and spend up to your credit limit. I wanted to call that out. That does nothing for your credit use if you spend the same amount that you increase your credit limit by. You have to make sure you keep your spend the same or lower, and then increase your credit score or credit available. That'll increase your credit use percentage. The one where you call up the credit card company to increase your limit, that one's a pretty fast one, again, within a month or so. And then the other one where you get apply for a new credit card, for example, that one is a bit slower. I would expect it would take a few months to have a positive impact on your credit. And the reason is because while you're improving your credit use percentage, you're simultaneously taking a hit in the new credit bucket of your credit score. That new credit ding normally only lasts for a couple of months. So then after a couple of months, your credit score should go up. Okay, so then the third bucket is length of history. And so this is a combination of how old your oldest card is, as well as the average age of all of your cards. The older, the better. Basically here, the number one thing to do here is to remember not to cancel old cards, and do not let them go inactive either. I learned this the hard way. Basically, I had two cards. One card was my oldest card, and it had a $95 annual fee. I was fresh out of college. I was that's too expensive. I don't want to be paying this $95 annual fee. So I called them up and I canceled it. And that's years of history gone. My credit took an immediate ding. The second thing that happened was my second oldest card. It wasn't giving me good rewards. And so I just stopped putting money on it. And after 2 years, I get a letter in the mail being this card has been canceled due to inactivity. Basically, my two oldest cards, boom, gone right there. And it took years for me to build up that length of history back. Point is, make sure that you're keeping an eye on your oldest cards, especially making sure that they're staying active, this kind of stuff. The point about the annual fee, by the way, you can always call up the card. Normally, like Chase, for example, has a family of 15 different cards. In which case, if you have an expensive one that has a high annual fee, usually calling them up and saying, hey, I want to downgrade that to a no annual fee card will allow you to keep that history without needing to pay the annual fee again. Another idea for increasing the length of your credit history is to add yourself as an authorized user of somebody else's card, like a parent's card. Generally speaking, parents are older than you, and generally speaking also, they have longer credit histories than you because they are older than you. So therefore, that is one pretty quick way to actually increase the length of your history. Be very careful with this one. And the reason I say this is that parents don't always have the best credit, I know they're older, but that doesn't mean that they're necessarily much better with money. And so you don't want a situation where you've now tied your credit score to their card, and then they don't pay on time or something like that. And then that could negatively impact your credit. And the other thing is also I tried this. I tried asking my mom, could I add myself as an authorized user on your card? And she's like, no way, I don't trust you to not screw up my credit. So I never managed to make this one work, but just anything involving multiple people, right? Like, be careful with it. You don't want to ruin relationships over something like credit. Okay, what else? The last two buckets are actually much smaller. They have much less impact on your overall credit score. But let's talk about credit mix first. So one thing you could do here is if you only have credit cards and you have never had an installment loan before, is, for example, if you're in school and you're good on money, maybe you might want to consider just taking out a small student loan, even if you don't really need it, especially if it's subsidized, and just like make regular payments on it for the sake of building up some of that credit mix. Another thing could be if you're thinking about buying a car, maybe consider getting a loan for your car instead of, say, leasing it or something along those lines. That's also an installment loan, and it's usually pretty good in terms of rates. I don't really recommend this one, mainly because I generally don't think it makes sense to take out loans that you don't actually need, and because credit mix is a relatively small portion of the total credit score. So only do this one if you have really, really good credit. Otherwise, you can get a really good rate on a car loan or student loan or whatever it is, and then make sure to pay it off on time. Okay, last recommendation here. So for the last bucket, which is new credit, right? So basically every single time you apply for new credit, you apply for a credit card, you apply for a mortgage, whatever, there's going to be a temporary dip, like a few months in your credit score, because any new credit application will have a negative impact on your credit score. So one of the things that you could do here is, let's say you're on the market for a mortgage or a car loan or whatever it is. Normally what you want to do is you want to shop around to get the best possible rate. Like, you don't just want to apply for one mortgage company and just be like, okay, I'm going with this one. You want to apply for 5 or 6 and then compare the rates between them. But at the same time, you don't want 6 pings on your credit score and then negatively impacted every single time. And the way you prevent that is by making all of those applications within only a few weeks, say 3 to 4 weeks. So you make all of your mortgage applications within 3 to 4 weeks. And if you do this, then the credit bureau will actually just consider this as one ping because they know that you're shopping around. So point is, if you are making multiple applications at the same time, do it in a very short window. And one last tip, which is not related to any of the buckets, but is actually really, really important, is to make sure that whatever credit card or loan that you have, that this company is reporting to all 3 credit bureaus. I once knew somebody who had, I think it was an HSBC card, and this HSBC card for some reason was only reporting to TransUnion and not the other 2. And so on TransUnion, he had a really good credit score, and on the other 2, it was really, really low. So before you apply for credit, or if you have a credit card already, just double check. You can call them up or just check the fine print of your documents to make sure that they are reporting to all 3 credit bureaus. They are Equifax, Experian, and TransUnion. Make sure all 3 are covered. And that's it. Those are my thoughts on credit scores. Would love to hear if you guys have other suggestions on improving your credit score quickly or slowly. Definitely let us know in the comments below. Also, if you'd like more support with personal finance, definitely make sure to sign up for Uprise. We build personalized Wall Street level financial plans completely and 100% for free. So if you have any questions about building credit, getting the right credit cards, but other things like budgeting or employer benefits or investing, definitely check us out. I've linked to us in the description below. And other than that, if you got value out of this video, please give us a thumbs up, hit that subscribe button, and click the bell for notifications. I'll see you guys next time.